Australian consumers spent more than $35 billion at the shops in June. While that's a lot of money and probably more than you and I will ever earn, it's quite a steep slowdown. Retail turnover fell by 0.8% last month, despite the end of financial year sales. Department store and clothing sales saw the biggest falls, but food sales went up slightly, since not eating is not really an option. Now, what will this mean for interest rates? Well, the odds of the Reserve Bank lifting rates next week have fallen to about 10%, though economists from Westpac, Commonwealth Bank and others reckon it's a lot higher. And there are those who argue the RBA might want to stay put for a while. September is around the corner, and that's when a lot of borrowers will roll off their record-low fixed-rate mortgages and experience the dreaded mortgage cliff. Meanwhile, the All Ords fell by 0.7% this afternoon, with mining stocks being the biggest drags on the market. But over the week, the Australian share market rose by 1.2% thanks to strong gains earlier this week. Overseas, the Dow Jones snapped its 13-day winning streak, while stocks in Europe jumped after the European Central Bank lifted interest rates to a 23-year high. Gold prices are near their lowest in 2 weeks, while oil has risen for 5 weeks in a row. And finally, the Aussie dollar has fallen to about 66.6 US cents, but it's taken a pretty big hit against the yen after the Bank of Japan surprised markets by loosening its yield curve control policy to try and reduce the amount of stimulus in its economy. And that's finance.